I think the dividend is as good as they could have achieved for this set of results. There's a bit of a relief, I think, from a lot of people that dividends are now being resumed after being off the table, cancelled last year. So they've declared 15 cents. The regulator gave them a cap of just over 16 cents, so they've come in just below that. I think investors will probably be looking for, well, where does the dividend go from here? And as you mentioned, they've set a new dividend policy of 40 to 55% of EPS. So now it's very much earnings driven, albeit there's still a bit of confusion, I suppose, for the rest of this year until we get a good sense for what the PRA's view of the current restrictions, which we'll find out towards the middle of the year.
And what do you make of the company's report card? $8.8 billion in pre-tax profit, and the company has announced a shift, their pivot to Asia. Is this good enough?
Well, the pivot to Asia, there's probably nothing new in that. I think it's fair to say that for years they've been skewing their resources, their balance sheet, their personnel towards their more attractive markets, most of which happen to be in this part of the world. In terms of the result, I think like most of 2020, I think looking backwards is probably not going to tell you a lot. I don't think there'll be too many analysts analysing the components of the $8.8 billion of profit for 2020. We're definitely looking forward here. But I think one thing you can conclude from it is that the worst is behind us. The downside risk of extreme scenarios of 9-12 months ago has very much reduced. The 4Q20 result is probably a stepping stone to better things ahead. So I think there's a lot of reassuring elements in the result, and now, as I say, I think investors will be looking for, well, what is achievable in the future, albeit most of the company's targets thus far, the guidance seems to be multi-year in nature.